Welcome to Secure Insights, the only podcast where you can hear about the latest cybersecurity issues, quick hacks, and trending IAM products directly from the industry's top data security experts. Hello everyone, and welcome to today's session. This is Jeannie Jessica, and you're listening to Secure Insights, a series of conversations with industry experts, influencers, and leaders in the cybersecurity space. In Secure Insights, every time we try to cover different industries for our audience, be it education or healthcare or government. So in this episode, we are going to focus on insurance industry. After this pandemic has taken a toll on our lives, insurers are planning to invest more in online sales. So with this shift in this insurance sector, there is already a threat, as there has been a genuine rise in cyberattacks. To understand more about cybersecurity in the insurance sector, and who can be a better person than someone who works for the insurance industry, right? So on that note, it's time to invite our guest. He is the Risk Management Advisor at Newfront, where he helps design, implement, and manage insurance programs. He is passionate about helping emerging digital healthcare companies. Not only this, our guest is also a former pro athlete and holds a great interest in football. So guys, please welcome the guest of today's episode, Justin Medlock. Hi Justin, we are glad to have you here in our podcast.
Thank you for having me.
We are very excited for this conversation, Justin. Since a good proportion of our audience belongs from insurance industry, we decided to dedicate an entire podcast for them.
Yeah, it's great to be on here and talking about some insurance, which people don't like to hear as much. But cyber is it's growing. There's some big risk out there, and it's the last couple of years it's been impacting a lot of companies, and I think in the future it's going to be here to stay.
Justin, you coming from the insurance background are the most fit person for this podcast.
It's been something I've been trying to learn a lot more now, as we kind of go to more of a virtual world of work from home. So it's definitely here to stay, and I think it's something that a lot of companies need to be a little bit more educated on, just because a lot of companies don't think that it doesn't pertain to their company because maybe they use a third party. So it's something to really educate the client and listen to what their operations is like.
So let me start this by asking, what is the need of cybersecurity in insurance sector?
Okay, so I think let's take a step back and just kind of talk about what we do. I think from an insurance standpoint, it's important to understand you're transferring a risk or you're retaining a risk. And so if you are transferring the risk, you are transferring it to another party, and you're transferring it to another company, from the insurance, the insured to the insurer. And then you need to, for us as risk advisors, we are really kind of asking questions and understanding what the operations looks like, from how they're going day to day, what are their security measures from a cyber standpoint. There's also different ways that we kind of piece together how we get more involved with these companies, from maybe their big exposure might be in work comp, or maybe it might be in a product. But for a lot of these companies, what they don't understand is that there's a lot of risk out there from the cyber. Everybody has a cyber risk. It's just that you really need to understand, and that's pretty much the first thing that we try to do as risk advisors, is to really listen to the companies and understand what their operations is like, so that we can identify and learn how to mitigate the risk. So to answer your question from the need of cybersecurity in the insurance sector, everybody has a risk. And it's really just being able to give examples and to educate the client, go through some scenarios, and just, make sure that they have the right cyber controls in place. And if they don't, maybe we talk about some of these issues that they might have, and how we can, better transfer the risk to another party or another company from the insurance side, or we can it's more about understanding and just figuring out how we want to mitigate the risk from the insurance standpoint.
Yes, the insurance industry is the one that provides cover for cyber insurance. And if they face the attack, the impact can go vast than just the insurance company faces.
Yeah. So another thing too about the companies, for example, they're, for example, emerging, digital health you had mentioned, telehealth, they have a lot of their exposures on an online platform, and you might have a bodily injury because of a tech failure or a cyber breach, or maybe you have the AI chat box that leads you to the wrong doctors, or it's shut down. It's a system failure. So, there's a third party liability for any bodily injury that happens. And that could be because of a cyber incident. So it's important for us to really listen to how that operations is, and then we can kind of build upon the plan, or that plan of action that we want to try to accomplish for some of our clients.
Yes. So you just mentioned about creating a proper plan to mitigate cyber threats. But before creating the plan, we should also know what are the different ways to identify cyber risks. So this leads me to ask you this question, that what, according to you, are the different ways to identify cyber risks in insurance sector?
Okay, yeah. So I think obviously I've mentioned this a few times, just identifying the operations first, right? So, as the rates are kind of climbing as in the last couple of years, it's really just identifying the operations. It could be, as I said, the telehealth. It could be a food product. You could have a food product that is manufacturing their food through another party and then distributing it out to, let's say, a Target or a Whole Foods or a shopping store or to a grocery store. And then your systems have been hacked and you're blocked out, or you're left out. You're not able to, get access to your computer system and continue with the normal business operations. That's where, you can really kind of identify those cyber risks and, be able to figure out ways that you're going to be able to transfer those risks, because you might have a business interruption from any kind of, you're not able to continue your business operations. So it's important to, just really identify the operations first, and then you can, be able to solve that. And so it's making sure that we understand it, and then we can go from there and be able to solve it and figure out how we're going to respond to, any kind of business interruption and be able to recover at whole. Yeah, it's identifying the operations. You need to, for the client, you need to understand what they're doing, what would happen if there was a cyber incident, and how that would impact the business. And then it's about forming together an insurance policy that can help transfer that risk, so that if you do have some kind of business interruption or some ransomware attack, or social engineering, or invoice manipulation, how is that going to impact that business? For some companies, there's a huge cyber risk component, and then for some, there might be a business interruption component, or they might get a ransomware to their system. So it's really just identifying the operations and understanding. From a telehealth or from a healthcare standpoint, you have a lot of information. right? So you have you have to be HIPAA compliant. You got a lot of data, so it's everybody's operation is a lot different than others, but obviously we're trying to secure the data.
Yes. So like for healthcare sector, we have HIPAA compliance. So let's dive more into this compliance, regulations and laws. And hence I want to know from you, Justin, that what are the different compliances, regulations and laws in insurance sector with respect to cybersecurity?
Yeah, so I wouldn't say there's actual laws, but there are definitely hefty fines. And for healthcare, you need to be HIPAA compliant. So you are storing a lot of data, and healthcare is a big target for a lot of these hackers. And so when they see a lot of these telemed or even brick and mortar healthcare companies, they're big targets. There's also, from a D&O standpoint, there's directors and officers. They have a duty to manage the company, and any kind of wrongful or mismanagement of the company, they can be liable and ultimately sued for not getting the right cyber measures. So if they know that they don't have the right cyber measures or cyber compliances, they can ultimately be sued, and their personal assets can be on the hook. So that's another one but really there's really hefty fines. There's really not a law, but in the healthcare industry and not being HIPAA compliant, and if you're targeting some of these healthcare companies and they aren't HIPAA compliant, there can be some pretty hefty fines.
Yes, so there are immediate costs and slow burn costs. Immediate costs can be very high and unavoidable, and slow burn costs may vary according to the type and severity of the event and how it is handled. But typically, it includes the long-term business impact. So all of these things, Justin, reminded me of one of the breaches of an insurance company named Anthem Insurance Companies on 27th January 2016. The company had to pay an estimated amount of $260 million for the remediation and cleanup. This gives us a lesson that all the insurance companies should have a proper cybersecurity plan to avoid such situations.
There's I think obviously the biggest one is the multi-factor authentication. I'll say that one time because that is definitely a harder one to say, but MFA, I like to say this as an example because I heard this one before. It's obviously you have layers to making sure that you're getting into your system correctly, and making sure that you are doing it through layers. So if you're logging onto your system, you go to the website, you log in, and you get there, and you put your password in, and then it sends it to your phone, and then from your phone, you're able to say, "This is me," and then you're able to get back into the system, and now you're logged in, right? And you think about it, and I heard this analogy the other day. It was about if you're going in there and you're going in there and you say there's a bank robbery, there's obviously you're going to walk through the door, then you're going to walk through the back, which somebody is going to notice, but you're easily going to be able to get through the door, and then you're going to get to the back, and then from the back you have to get to the door that's going to get you into the vault, which might be a steal, might have a combo or a combination. Then you might get into the back, and then you'll have another layer, and you might have to break into that vault. And we've all seen the bank robbery movies. And so I think that's a perfect example of how cybersecurity measures need to be in place, that there should be 3 to 4 steps before you get into a place where you're accessing your data. A lot of cyber companies obviously have those measures. So I think that was kind of an interesting little story that I heard. So I don't know if that's the right one, but maybe I heard it and it made more sense to me and made it more simple for a lot of, I think, to explain to a lot of clients.
Yes, so in general, we can say that adopting a Identity and access management solutions will help us mitigate risks, be it any sector.
And there's so many examples out there. I don't know if you're familiar with like social engineering or invoice manipulation, business interruption, ransomware. Are you guys familiar with that?
Can you please dive more into that topic and give us few insights?
Yeah. So, for example, a social engineering might be, let's say a hacker breaks into your system outside of your company and is able to send money to a certain address, and now you have been hacked. That's a social engineering. And invoice manipulation might be able to, somebody goes in there, gets the invoice that you might have and changes a couple numbers to reroute where the bank information might go to, and then it will go to that other, let's say another bank information that might be in another country, and they may send an email from the CFO and say, hey, send an invoice or send a payment over to another country. And so those are kind of different ones that are insured on a policy. It's from an invoice manipulation and social engineering. They sound very identical, but a little bit different. And then, obviously you have your business interruption, because that's really the pinpoint. I think that's one that people need to understand, is that there's first party and third party, and business interruption is a first party. It's a damage to you. So it's a damage to your company. And if you have, from a business interruption, if something happens to your company, or say something happens to your systems and it gets hacked and you're out of your system for 2-3 days, or maybe 2 weeks, or maybe even 4 months, what does that look like for you? One of the situations that happened was a carrier called CNA, which is an insurance carrier. They actually got hacked, and they had a business interruption around $40 to $50 million, I believe, and they were not able to bind insurance coverage for that amount of time. So they have lost a lot of money for their actual business. They weren't able to respond to emails. They ended up losing a lot of business because they had been hacked. And here is a company that had talked about them having really good cyber measures. So it's an interesting one. And then everybody knows about the SolarWinds. And so it's just, and I saw another stat the other day about Microsoft has about 300 million sign-in attempts a day, which is amazing to see that is happening all over. So it's happening and it's growing. So it's interesting to see.
Yes, and what I personally feel is that creating a cybersecurity culture in your organization and training your employees also plays a vital role.
Yeah, it's definitely a big measure right now, is to see how your employees are, downloading things. Are they clicking on things? Are they sending emails? They see these emails. Just for example, that CFO may be sending it to a finance person or accounting director and saying, "Hey, send this over to another party." How do we know that actually is supposed to be the right measure? Should there be second steps before you send over $1 million payment? And then, a lot of people are working from home, so there's open computers and people are going out for walks and coming back, and that gives us, the computer is open for everybody else to be able to dive in, and it's kind of just an open book right there at that point. Once you get in, you're leaving that computer on. So there's definitely some measures. It's going to be hard to keep on top of people as long as they're working from home, and so it's maybe, I don't know if that's one of the issues that why cyber insurance is going up, but I'm sure that's maybe a little, but maybe very, very little. So
due to this work from home policy, people are shifting to bring your own device. So do you think that will create more room for cyber attacks?
I mean, there's going to be personal, obviously from a personal side, there definitely is. It's already happening. I mean, you think about some of the celebrities or stars out there, if they get hacked and, their personal information gets leaked onto a system. It's going to be interesting to see how the cyber world plays from a personal standpoint, because a lot of the stuff that we store is on our phone. So even though it might be you're using it through the cloud or through the computer, you're still able to access it through your phone. So it's interesting. We'll see how it all plays out in the future, from how your own personal stuff goes to compared to your work computer, and that being open and being more files on there, more data, compared to a lot of stuff is really stored from your phone. A lot of people can just work from their phone now. So it's a lot different world that we live in now compared to maybe 10 years ago.
So Justin, this leads me to ask you, how is your organization, Newfront, managing a cybersecurity culture?
Yeah, we're doing, we talk about it probably every other week, go over the measures. We definitely have our multi-factor authentication measures that we go through. Actually, it was interesting. I was logging onto the computer today and I thought to myself, wait, I can't get on? There's something going on. Why is it not going from one network to another? So we definitely have, I was like, oh, did I just get a hack right before I did this? So we definitely take our measures seriously. We make sure that we don't download things unless it's the right one. We're contacting our IT people. We're very heavily involved on that. And then also we like I said, we have different measures to get into different programs and stuff.
When we consider insurance ecosystem, which includes insurance providers, third-party brokers, so who, according to you, are at most risk?
The insurance carriers are definitely backing out, and this is for an insurance as a whole. This is definitely a hard market, and then insurance carriers are definitely, it's a tough one to get into the cyber market. They're backing out of a lot of excess coverage. So for example, a lot of coverage is you might get $1 million coverage for one company, and then you might have a bigger company. Let's say you have an Instagram or a Twitter, a Facebook, or ESPN, whatever it might be. If you have that and maybe they're looking for $100 million in coverage, that is very, very hard to obtain, because a lot of the bigger companies are going to be at bigger risk, and everybody's going to be at risk, but the bigger companies are going to be at big risk. And so you're seeing from, let's say, a CNA or a SolarWinds, they're taking big losses. So a lot of these carriers, to get excess coverage or the capacity, they don't want to be able to go, okay, I'll do 5 million here, and then I'll do 5 million on top, and then I'll do another 50 million. Whereas sometimes with a lot of, you'll just have a general liability, and then you'll have an excess liability. You can get 10 million here, and then another 10 million from CNA, and then another 10 million from Hartford, and another 10 million from Chubb, or go to London and get another 50 million. But with cyber, it's becoming such a hard one, because nobody wants to be on they might do the first 1 million, but then the next 10 million might be nobody wants to take that next risk, because you never know how much this loss can be for a lot of these bigger companies. From the broker side, that's been a lot tougher for us to shop out and say, hey, we might need $10 million of cyber coverage, which might be a very, very hard thing to obtain. Every company is a lot different, and the bigger, more people that they have on in the company, they might have more exposure. The bigger they are, obviously they have bigger exposure, so they're always looking for bigger limits. So maybe a $5 million limit or $5 million policy for a cyber or for $5 million cyber policy might not be what a company really wants. It's really hard to go out there and try to get another 15, 20, 30, 45 million of coverage. And so that's been hard, especially with a lot of these attacks that's been happening. So And I think that's even going to be harder as we continue to go in the next.
So guys, this was the last question and we have come to an end. Thank you so much, Justin, for taking out time and joining us. It was great talking to you. And thank you, listeners, for tuning in. We will meet again on another episode. So until next time, goodbye.